Thanks a lot, everyone, for joining us today. I think it's a slightly different kind of session today. We're going to be focusing a lot on compliance changes, regulatory changes that have been brought about in 2023. We'll talk about what they mean, how can you make the most of them, and just a second. I think there's an So we're going to be speaking about compliance changes and how have they changed in 2023. We're going to be hearing from Richakant and Dushyant both. A little bit about both of them. Richakant himself is an ex-director at KPMG. He spent a large part of his career there and has recently joined CashFlo and is leading our commercial team here now. He comes with a wealth of knowledge from his KPMG days on compliance. He understands B2B payments deeply, and I'm sure that he'll be able to add tremendous value here. So welcome, Richakant.
Thanks. Thank you, Akshay. Thanks so much.
We also have Dushyant here. Dushyant is the co-founder of CashFlo. I think he's spoken a lot to so many of our prospective clients and the kind of issues that they're facing on the compliance side, the kind of challenges that they face with ever-changing regulations. And, a large part of his effort is also spent on making cash flow such that these compliance challenges can be dealt with, right? So both of these are like titans of the industry. Both of them understand B2B payments like very few other people do in India. And I'm sure Dushyant as well as Richakant both can like add tremendous value today. So Dushyant, like, thanks a lot for joining us today here as well.
No, glad to be part of this.
Superb. So yeah, I think we should jump into it. Actually, I think I just wanted to understand from you guys, right? So I think a lot of changes have taken place in the last like year or so. We've had changes on the GST front. We've had changes on TDS. Do you just want to set the tone a little bit about like what is happening on in these areas? What does a finance leader or someone working on the accounts team within the finance team or different people within the finance team, right? Like, what do they have to look out for, right, in this scenario? You just want to set the stage for that?
Sure. Let me get started, and Arke, then you can pitch in. See, the way I look at it is regulation is a fairly evolving landscape, right? As the technology adoption is increasing in the country, the government is also getting fairly tech savvy and trying to figure out how can the regulation be tightened as well as made actually, technologically sort of easy to use, right, for the entire community to be more compliant, right, with all the rules and regulations. With the overarching objective being how do you stem the leakage, right, that is happening in terms of the revenue for the government. As well as also ensuring that there are certain policies or practices that government wants to, essentially promote for the betterment of the economy, right? How can they drive those better, right? I think two or three areas that I have personally seen, being very key focus areas, especially for the current government, where they've done a bunch of, changes and regulations have essentially, have come in. I think one is GST, right? Everyone knows, how big a change GST was, and how it is still evolving, and how still government is figuring out what more to do with GST. How can it be made more better? How can it help overall the economy? So I think there are a lot of changes that we have seen on the GST end, and which we will continue to see, in the coming years as well. Right before it reaches a certain, stabilization. I mean, all said and done, it's what about a 5-year-old, thing. And then, at a scale at which, for a country like India and an economy like India, these things will take time, to reach a certain stable stage, right? So as to say. So I think GST is one very clearly where we are seeing a bunch of changes happening. The second key focus area that we have seen for this specific government, I think, again, over the course of last 3 to 4 years has been around MSMEs, right? How can MSMEs be supported, right? How can MSMEs be helped? How can MSMEs, grow faster, because at the end of the day, they are the backbone of the economy, right? They are what give the 10x multiplier, to our economic growth. That is essentially what will help us, achieve the dream of a $3 trillion, economy, a $5 trillion economy, right? So I think that, is a key sort of area, right? And the third one I think that is coming in is again around more sort of TDS, right? Specifically is what I'm seeing, which broadly is around income tax. If I talk about specifically, right? Again, like GST is one end of tax spectrum where government wants to plug leakages. They also want to plug leakages in income tax, right? And corporate tax, which is where TDS is essentially comes in. So I think these are the three high-level themes that I am, at least observing from a functional standpoint, where we have seen a bunch of changes come in, in the last couple of years or so. And some of these are still, I would say, being implemented. It's not like government has mandated them, because it is also giving time to companies to adjust to some of these changes. Some of them are more natural, organic in their rollout. People get more used to it, they adopt to it, right? And then they start using it. Some of these government is pushing very hard top down to say, this is a deadline, you have to get it done by this time. So I think we are seeing both of those parts, and I think as the webinar goes on, I would love to talk more in detail on these three things.
Yeah, I think it's a little bit about like discipline as well, right? I think I think we've all experienced this, right? On the personal income tax side, for instance, deadlines are now actually like adhered to, right? Like we don't have deadline extensions anymore, and obviously this all ends up in the government's coffers and sort of used for development. So I think in general, like what I'm seeing is that there's also like more discipline like being put into place. RK, what's your like take on this, right? Like I know you had a couple of like interesting points to add as well.
Sure. So if we look at compliance and the overarching thought, and all of us know that compliance is not optional. There's no getting away with it. What we've seen is that obviously the burden of compliance is now on the anchor or the large corporate who's making all these buying decisions. But in this whole process, there are three things that are very important, both from a CFO and a CIO or the overall leadership of an organization. And the first is around the compliance obligations cannot be slowing down your processes, which means that I cannot do a lot of post-facto things. My compliance processes cannot be outside of my current processes. So my business processes are separate, my compliance processes are separate. They need to go hand in hand. Otherwise, in the advent of meeting your compliance requirements, which is non-negotiable, slow down your business, which is not acceptable to the leaders as well as to the finance and the technology team. So that's one area. The second area that we've seen, and in a lot of financial services business, that the cost of compliance cannot be so high that it does not make sense from a customer acquisition perspective. So the speed of adhering to compliances has to be at a cost which is in sync with the entire, it cannot make the entire P&L negative. And not only at a P&L level, it also has to make sure that at a per transaction level, it makes a lot of business sense. So that's the second area. The third and the most important part to me is the intelligence that any compliance tool or process should give a business leader is actionable in nature. Otherwise, it will not be a part of your process. So while you are in the process, you're solving for and meeting your compliance requirements, any intelligence that comes during the way is actionable, and you can take corrective measures while you are solving or while you are in the business process itself. And majority of it is not post facto, which basically tells you after two to 3 weeks that you missed a compliance deadline or a compliance requirement, and now you have to go back and solve for these things. So these are the three trends that we've observed from a CFO, CIO, and even a business head perspective, where they need a lot of change to come in to the whole compliance obligations scene of things.
Got it. And like, I think you mentioned briefly that, one, like it's about speed, it's about being proactive. I mean, I think like in order to be proactive, I think it's really important that you have the right information at the right time, right? I mean, that's the only way you can be proactive. Is there a certain like component of like tech that is required here in order to sort of make that information available contextually at the right time, so that you know, like teams can make better, leaders and teams can make better decisions?
Sure. So thematically, business leaders need to balance between customer centricity, cost of operations, ensuring service levels are as per the business metric, and the ball of compliance doesn't drop. So these are three balls that you're juggling with. You cannot drop any of the three. So that's thematically what it means. But to do the change that's happening, which is making it difficult for business leaders to juggle between these three balls, is that the regulator themselves have become extremely tech savvy. We've seen instances and scenarios where the regulator is coming in for audits. They're just plugging into the systems of large organizations to pull their obligations around GST, and are able to come at a more conclusive compliance breach rather than the way it was done in a paper pen kind of a way in the past. So one, the regulators become tech savvy themselves. The auditors themselves have also become very technology, the adoption there is very high. We've seen auditors pushing towards e-audits, towards understanding where to focus on rather than just picking up samples of data in the past. The auditors have also become extremely sharp in terms of pinpointing where the issues could lie. So that's one part of the problem, one part of change. The other area is from the organization perspective. Now, how do you solve this? We've seen there are two ways where these can be solved. Either you solve it in your legacy system, which is your core ERP, or you look at point solutions. And here it's important for an organization to slice their front office, mid office, and back office applications to be able to see where is it that I need to solve for. Great ERPs, the SAPs, the Oracles of the world are amazing softwares for back office operations. On the front office side, you'll see a lot of Salesforce and other applications which help you from the customer and the consumer side. But when you're looking at mid office, where the entire process of an organization is running, the trend has been a lot of organizations moving towards point solutions rather than solutions which are fairly clunky or fairly enterprise wide solves, because it gives flexibility of solving a business problem. Also, it makes the intertwining between the business problem and the compliance very seamless. So I can run my business problem without a break, without a post facto check on my compliance. And so these are the two areas. One of the things that most of our clients are seeing that is the lifespan of an ERP or a core solution is 5 to 6 to 7 years, and getting implemented, getting it stabilized is a 12 to 18 month journey. So how do you say that can I change my ERP every 5 to 6 years? Very difficult. We will have to look at moving towards pointed solutions for AP, AR, and the other set of problems that CFOs need to solve for, primarily focusing on the mid office side of things rather than the front office and the back office applications.
Yeah. No, I think that's particularly. I mean, I think one of the things that you mentioned was that mid office is where like process lies, right? And what I've seen is that like wherever there's like process, like tech can enable that a lot. Tech can like reduce errors. It can boost efficiency as well, right? So I think that's quite a relevant point here. I think before we get to like talking more about tech, right, and how can we leverage that to sort of take care of the different compliance changes that happened in 2023, let's just reflect a little bit on what those changes are, right? So we've got GST compliance, for instance, where buyers can't claim provisional GST anymore. Dushyant, do you want to maybe dig into that a little bit, like explain to our audience what exactly is happening there? What does it mean that, you cannot claim provisional GST anymore, and what are the implications there, and how to solve for them, right? Like,
Sure. Yeah, no, let me give a little bit more flavor around this. So I think this actually happened sometime last year, right? Uh, so originally when GST was implemented, right, as a buyer organization, I could basically give a declaration from my end that these are the X purchases that I have made in a certain month, and I could claim GST, on those purchases, right? Because I'm doing a declaration, I have the data, I have the proof, I have the invoices available with me that my vendor has provided me, and basis that I'm able to claim the GST credit, right? And then you could do a recon post facto to see, okay, whether the vendor has actually filed those invoices or not, right, in the GST portal, and if there is a mismatch, right? And it used to happen more reactive in nature, and there was no loss per se to the anchor corporate, or to the buyer, in this example, right? But essentially, I think around mid of last year is when government made the change that as a buyer now you can claim input tax credit only if the vendor has filed the GSTR1 for that particular invoice. Because when the vendor files the GSTR1 for a particular invoice, that starts reflecting in the GSTR2 of a particular buyer, and a buyer can only claim credit against the entries that are reflecting in the GSTR2. Right? What it means is, if my vendor is non-compliant, if my vendor is not filing GST on time, now that has an implication on me as a buyer, right? Because I cannot claim the input tax credit, right, which I should have rightfully claimed in this particular month. Now, in most scenarios, I, as a buyer, will be able to claim it next month, which is, it's still a loss. It's a working capital loss for 1 month. I did not need to have this cash outgo in this month, right? But now, I'm having to do that cash outgo in the current month. I will save it next month, but it's a 1 month working capital loss. In worst case, if the vendor just doesn't file it at all, then it's a complete input tax credit loss, to me as a buyer, right? What I've seen is that there are two ways in which companies have responded, to this change, right? There is one set of companies who essentially what they did was they said, okay, I am now completely blocking the GST payment. I will only release the base part of the invoice to my vendor. And whenever I do the reconciliation, 3 months down the line, 6 months down the line, right? Typically, organizations used to do the compliance or the GST reconciliation quarterly, right? Prior to this change happening. A lot of them still do, by the way. But essentially, the buyer here took a call saying, I am stopping all the GST part, all the GST payment to my vendor. Right. So let's say, for example, if the vendor had raised an invoice for 118 rupees, 100 was the base amount, 18 was GST. I am paying them 100 rupees as per my terms, but the balance 18, I am holding it, and I will pay it only after I have done my recon activity, right? This is something that the large buyers essentially could get off with because they had the bargaining power, right? They could tell the vendors that this is how it, sort of we operate, and sort of so be it, right? But obviously, this is like a complete bargaining power, kind of a thing, because the vendor would essentially come back and say, you know what, I have actually filed the GST, but just because your process is inefficient, you are doing reconciliation 3 months down the line, you are penalizing me for it, right? Which is also not fair, right? So one kind of organizations took these call, which were saying, I will block the GST till I get the info.
Yeah.
The second organizations, they said, let's continue with, whatever the process was, it's fine. Yes, there is a loss that can happen, but it's okay. Like I can't force my vendor. I have to pay them, on time. I don't have that kind of bargaining power. So we'll do the recon, and when the issue, comes up, then we'll take the issue. Both of them are inefficient solutions, right? And there wasn't a solution essentially available in the market to to ideally solve for it. But that's sort of one major change, that happened, and that's how I saw companies respond to it, right?
And I think both of these are like post facto ways of doing it, right? Like in one case, like, you increase your risk, right? If you pay off as a large corporate, you increase your risk if you pay off the GST component, and then the vendor might or might not file for GST.
Correct.
You don't have visibility on that, right? So And in the other case, while you don't sort of take up risk, you do sort of put the burden of risk on the on your vendor itself,
On the
right?
vendor.
So yeah, and that can have like other repercussions. So but like I mean, I know that like there are like solutions available. Like I mean, does CashFlo enable some of these things? Like how does it enable it? Do you want to shed some light on that as well?
Yeah, sure. So this was a very specific, pain point, which this was all organic to us, right? When we spoke to our clients, we realized this kind of requirement coming up, from them, where they were like, theoretically, if I had to create a solution, is it not possible that this reconciliation can happen almost real time, and it can be made available to me before I release the payment, to my vendor? So whichever vendor is compliant, let me release the GST part to them, right? If I get that information beforehand, let me not wait 90 days, to achieve that. Can we crash that time and, do it faster? And whichever is non-compliant, now I have actual proof that they are non-compliant. So I can hold the GST, only for those specific invoices or for those specific suppliers where I have the proof that they are non-compliant, right? So even if the vendor would, let's say, come and argue, come and question that why is my GST being held back? As a buyer, I have, actually proof. I can tell them, what, we did the reconciliation. We could not find the invoice. And, if we could not find the invoice in my GSTR2, I'm well within my rights to hold the, GST part of that payment, because I want to ensure that you are compliant. So this movement from doing this check in a reactive fashion versus doing this check in a proactive fashion, I think that's, one of the major changes or major requirement that we are seeing coming in, from set of CFOs that, we work with, right? And, generally across the industry. And this is a very specific, functionality that we've enabled through our cash flows, payments automation, solution, where we provide this ability to a buyer to be able to check the GST status before they release the payment, to a vendor. They can even actually set policies. They can say, I don't want to take this call on an invoice level, right? I will set a policy. If the invoice is compliant, let the GST go. If the invoice is non-compliant, let the GST be held back. It's completely system driven. You don't have to decide anything. No one takes a discretionary call that whether GST is being released or not being released, right? So there is no chance of any favoritism or anything happening, right? It's a set process, set policy according to which the payment is being released. And also, I will inform the vendor that I have taken this step, right? There is nothing to hide, in this whole scenario. We'll transparently inform the vendor that your GST has been withheld because, the proof will not be fine.
I think actually it's kind of like a win-win, right? Because I mean, if the different entities who are involved in the transaction are actually sort of doing their bit, if the vendor is actually filing the GST, then there's a win-win created where like the GST is sort of paid out by the buyer immediately as well, right? But if for some reason, right, like I mean, and I mean, like nobody has an ill intention per se, but a lot of times, like you might forget an invoice filing by any chance. The buyer can always like get that visibility and also inform the vendor that like this particular invoice is unpaid at this point of time. So I think a lot of like win-wins being created here, right? Like more transparency for everyone as well through this system. Yeah. So
one more point to add. See, the other thing that was inhibiting this, right, or is inhibiting this today is from an org structure standpoint, typically the tax team is separate and the payments team is actually separate, right? So the payments team may not always have that right set of information from the tax team to say what is compliant, what is not compliant. A lot of time, energy, and friction is going in these two teams also coordinating with each other, right? And them saying, okay, you know what, this is the like if I think from an org level, right? Like the KPIs, I need to save working capital for the company. I need to ensure that there is no loss. But that is not the KPI of the tax team or the accounts payable team, right? The KPI of the tax team is give the data that what is reconciled and what is not reconciled. They'll say we've done it. The AP teams, KPI essentially is releasing payments, right, to the vendor. Their KPI is also not to, save this input tax credit. So who has the KPI, to actually ensure that as a company, I'm not losing any input tax credit? I think that's another challenge that we have seen, in organizations, right? And in the absence of a system and in the absence of that KPI, is where sort of this is somewhere, in no man's land.
Got it.
So from
Got
a
it.
tech, so if you look at the tech stack, Akshay, you have an ERP, you have a GST recon engine, and then you have a banking infrastructure. And there are 3 different teams in an organization working on this. The point solution is to weave all of these 3 things together, make the information actionable. So I know I've looked at it, I've got the input from my ERP, I've got the recon from my GST infrastructure, I've made the payments, and I've sent the reconciliation back, and I've closed the process end to end in a near real time environment. There's no post facto changes happening at all.
That's right. That's right. That's right. Yeah, I think before we move ahead, all the participants here, like we will be taking questions at the end. So if you want to submit a question for Richakant or Dushyant, either use the chat box or use the question and answer, dialogue box on our screen. So we will be taking questions at the end. But I think like GST is like, I think one area where like, I think it's something that's still evolving, a lot of changes happening there. Dushyant, do you want to talk a little bit about like the reverse charge mechanism with regards to GST as well? Like,
Yeah.
I think some changes there as well, right? And some additional checks that need to be done at a vendor level.
Yeah. No, I think no specific changes per se, but GST essentially. So there are different kind of vendors, right? That are under the GST ambit. You have obviously the regular, GST vendors, and you have non-GST vendors as well. You also have vendors who operate on a reverse charge mechanism, which is basically to say that as a buyer, I will pay the GST directly to the government, and I will not pay it to the vendor, and the vendor will not, pay it, to the government. There are also other categories of GST like composite, vendors where, effectively they are not supposed to charge GST to me as a buyer, right? And I'm not supposed to claim input tax credit on it, right? I think what we are seeing is that again, as these, this gamut, of the GST coverage is increasing, right? Overall, as a buyer now, it's very critical for me to also identify that if I have a vendor X, what category do they belong into, right? Are they unregistered? Are they regular GST suppliers? Are they RCM vendors, right? Because my treatment of how I record the GST component in my own books is different for each of these categories. Also, my treatment with respect to whether I have to pay the GST component, to that vendor or not is very different, right? For example, if an RCM vendor has put GST in the invoice, I'm still not supposed to pay the GST component to them. I'm supposed to pay it directly to the government, right? Now, again, not with malicious intent, but maybe a vendor, just sort of did not specify this very clearly in their invoice that, oh, I'm adding a GST component, but it's on RCM, right? It's not supposed to be paid. And while accounting, right, if a buyer accounts it as a normal GST invoice, they would have ended up paying that GST component, to the vendor, and then separately, as an RCM sort of filing as well, right? So that's a potential risk and a potential loss, that a company could incur, right? So, again, now, like I'd say maybe 2 years back, right? You did not have a solution to it, right? On how do you solve for it? But now, as technology is progressing, there are solutions available where you can actually do this check beforehand at the time of booking the invoice, that whether the vendor is an RCM vendor, right? And then you're very sure that, oh, this is actually an RCM vendor. Then, irrespective of whatever has been written on the invoice, there is a certain treatment that I need to do with that invoice, right?
Yeah.
So that again becomes a very critical factor in ensuring that in any off chance there is no loss, that's happening, to the company as a buyer.
Yeah. And I mean, like speaking of like checks on invoices, I think like we also had like e-invoicing that was introduced.
Correct.
Initially with a larger threshold that's now reduced, right? I mean,
Correct.
if your company turnover is, I think today it's 5 crores.
Yeah.
On an annual basis, you still need to like enroll for e-invoicing, and all your invoices need to be invoice compliant. Could you tell us a little bit about that? Like what exactly is happening there?
Yeah. So again, I'll give a little bit more context, right? So the e-invoicing essentially was introduced again as a way of ensuring that there is no GST leakage, right, for the government. Because when a company raises an e-invoice, it automatically flows into their GSTR filing, and it gets saved in their GSTR portal. So they can just immediately pick it up and file the GSTR one according to that, right? So it ensures like One, it ensures that the vendor doesn't have to upload the data again in the GST portal because it's already there at the time of invoice creation. And second, it ensures that once the data is there, the probability that someone will delete it, right, or they will miss out on it, that essentially goes down, right? So that was the underlying intent, with which the government sort of, let's say, launched, the e-invoicing initiative. And that's why they've been gradually reducing the turnover threshold. And, my assessment is that over time, essentially it will be mandatory for all companies, to follow this mechanism. The technology is there. I mean, and it doesn't cost anything, so there is no reason why not. It should not happen. But again, what this means is, as a buyer now, I both have an obligation and an opportunity, right? To say at the time when I've received an invoice, can I check it right here and now that, okay, this is the right invoice, right? I have the obligation because I have to ensure that, okay, this is my vendor who was e-invoicing compliant. He was supposed to, or rather, they're falling under e-invoicing category. So they should have sent me an e-invoice. And then I need to check that the e-invoice is valid, right? It's an obligation, but it's also an opportunity that if I do this check, then I'm reasonably assured that I will get my GST input tax credit, on time, because the vendor is, has done all the things right there, right? So depending on how, you wanna look at it as a buyer organization, we have buyers who look at it as an opportunity, saying I have a great tool now available, right? Let me do this check upfront at the raise, at invoice booking stage. It ensures I will be better off later on, right? So that's an important check that buyers now want to do at the time of booking an invoice, that whether my vendor was supposed to send an e-invoice, have they actually sent an e-invoice? The e-invoice that they've sent, is it a valid e-invoice or not, right? That check, is becoming more and more prevalent and critical, that every buyer wants to do it. And again, which is something that we, as CashFlo, as part of our AP automation suite, enable seamlessly for our clients. And that specific functionality, again, we have seen being highlighted as one of the key, functionalities that people appreciate.
Yeah. No, I think again, interesting, right? Like, if you can manage this process early on, where you can like identify whether it is an e-invoice, whether the particulars of the e-invoice are correct, whether the QR code has details related to that invoice itself, like the downstream process actually becomes much easier. But I think so we've spoken about GST compliance, we've spoken about e-invoice checks. I think one other area where I think there has been some movement is on the MSME compliance side. I mean, MSMEs are, like, in general, the backbone of the economy, and there are some steps being taken to sort of make payment terms more predictable for MSMEs. And again, here the burden of compliance here is on the buyer, as long as the vendor has declared that they are an MSME, right? So Richakant, maybe you want to speak about it a little bit, tell us about like what's happening there.
So I think all of us are aware that there was a TREDS platform that was announced by the government. There is also a lot of focus around making vendor payments on the 45-day timeline to MSME vendors. Also, in the near future, we are looking at a lot of technology and a lot of fintechs working in the open space. You will see a lot of LSPs, a lot of fintechs coming together with banks and financial institutions to help the lending part. And what the POC that the government is doing with GEM, and in one of the conversations that we were a part of, we heard that as of now, the timelines that the government is given is that if there is an embedded credit disbursal that's likely to happen to an MSME based on purchase orders or GRNs, the timeline for credit approval is 90 days and 90 seconds, and the disbursal has to be done in the other 90 seconds. So the focus for the government is to ensure timely payables to the MSMEs. That's given. They've done a lot of things from an infrastructure perspective to enable this. From a process standpoint, this will become extremely taken to the T in the coming years. and Udyam will play a very, very critical role. So now, gone are the days when you cannot live with the MSME certificate or the MSME certificate of your vendor. And a lot of times there have been discrepancies in companies who were MSMEs in the past are not an MSME anymore and trying to claim benefits. And a lot of times companies who were not disclosing that they were MSMEs because of XYZ reason. I think next couple of months and, not more than a year down the line, these APIs from the government will be again a part of how business will be done. We will be expected to make payments to these vendors in the 45-day time period. There is a stringent penalty that's already there in the system, which is 3 times the bank interest rate, which is not followed to the T as of now. But with Udyam APIs, going live in phase 1, and as it goes, you will get to know the MSME status of an entity. Also, what changes have happened over a period of time. So these APIs will start hitting the ERPs of an organization, the GST recon engines of the organizations, and the payment infrastructures of the organizations. So going forward, this deadline of 45 days vendor payment and a compliance breach there will get more and more stringent. It will become more and more it'll move more and more towards this where a lot of penalties will also be experienced by these organizations. So that's a big change that's likely to happen on the MSME side. And there's a lot of point solutions that organizations will need in terms of validations, payments, and reconciliation with the GST portal. There's a whole element of composite vendors, which will also play a critical part into the APIs that organizations use.
Got it. And from my understanding of MSME compliance, there is no way to know whether a vendor is MSME simply from the PAN number or SIN number, right? So essentially the vendor needs to disclose the Udyam number to you, and that's the source of truth now. So there's no direct way as such apart from that where we can come to know, right? Inherently through the PAN or the SIN itself.
Correct. There is no mechanism to do a checking proactively. I think the risk is that because the cost of compliance is high, right? If the vendor is an MSME, the risk is that a non-MSME vendor may want to pass off as an MSME vendor and actually share a declaration, right, that they are an MSME vendor, or not just wanting to pass off, but I onboarded a vendor today, they are an MSME today, but they're also a growing company. Next year, couple of years down the line, they actually move out of the MSME threshold, but my systems are not updated because I had taken that Udyam number, at the time of registering, right, that particular vendor, and it doesn't get refreshed, right? So my system doesn't actually, know that, oh, this vendor is now no longer an MSME. The vendor also didn't sort of find time to clarify that, right? As a buyer, maybe I asked them, I sent them an email, they didn't respond, right? Whatever, all these things can happen. So at least a mechanism exists where you can now, using the Udyam, check that, okay, whether this Udyam is currently valid or not, all right? So then you are sure that, okay, wherever you are actually following the MSME practice, the vendor is MSME, and you are not following it for any non-MSME vendor, because like I said, right, the cost to, there are certain obligations that you have for MSME vendor, and you wouldn't want to take obligation for a non-MSME vendor, right?
Got it. So, so I think while, we can't check for MSME compliance via PAN number, there are some rules around around TDS, right? And if a vendor doesn't have a PAN number, if a vendor doesn't have the PAN and Aadhaar linked, then there are some rules around increased TDS deductions. Do you want to stress on that a little bit as well? Delayed ITR filing by the vendor, how does that work? What is the TDS that needs to be charged by the corporate or the buyer in these scenarios?
Yeah. So again, see, I'll give a little bit the underlying thesis on essentially why this government is sort of trying to bring in these practices, right? It's essentially to avoid tax evasion, right? So if we know, right, if as a buyer, so the owners basically they've tried to put it on the buyer here, saying, okay, as a buyer company, if my vendor has not filed income tax return for the last year, then I'm supposed to deduct TDS at twice the rate, right? So that basically ensures that more tax gets blocked for the particular vendor, and they will be so much more incentivized, to then file the ITR, right, and claim that input tax, or rather claim that tax credit, right? So the obligation here is from a buyer standpoint to check whether the vendor has filed the income tax return last year or not. Right. There is also an obligation to check whether the PAN of this particular vendor is valid or not, right? Because if the PAN is invalid, again you are supposed to deduct TDS at a higher rate, right? The third check, which is applicable for, this is more for employees, right, per se, and sole prop kind of vendors, is if you've not linked your PAN and Aadhaar, right, then again TDS is applicability higher. Though it actually feeds into the second point which I made, that if you've not linked PAN and Aadhaar effectively, your PAN has been invalidated by the government. So it actually feeds into the the second point, essentially checking for the validity of the PAN itself, right? So again, these compliances are becoming, the government is becoming more and more stringent on some of these things, right? Penalizing buyers that they have to deduct these TDSs extra, right? And if they don't do it, right, and it gets caught in audit or in any regulatory check later on, then the penalty on the buyer is even more severe, right? And hence buyers want to be extra cautious and say, let me check what is the status for my vendor, what's the right TDS that I need to deduct, for this vendor, and ensure that I'm deducting it upfront, because otherwise, as a buyer, I would have paid that amount to the vendor. I would not have deducted it. I would have to pay it again to the government along with the penalty, right? So it's a double whammy, for me at a later stage. So again, that's again something very a very critical aspect that we have seen becoming important for buyers today.
Got it. And could you, I don't know, I think we've talked about GST, we've talked about e-invoice checks, MSME compliance checks, and we just spoke about TDS as well. Could you tell us a little bit about how, this ever-evolving landscape on the regulatory side, how does it affect audit and recon, right? And I think one of the biggest advantages of tech would also be that you can take care of all of these things proactively, but retroactively, if there's an audit or if there's some reconciliation that needs to be done, then that becomes much easier as well, right? So Richakant, maybe you want to take the lead, and then Dushyant, you can chime in as well, right here.
Sure. So, reconciliations have always been an issue in organizations, whether it's bank reconciliation, vendor reconciliation. And it's always been a nightmare, because an organization's ERP is one infrastructure and your vendor's ERP is another infrastructure. How this can be solved, and there are multiple point solutions. I think the inherent part is that when you are completing the solution of deciding what amount needs to be paid post multiple deductions, you need to have a virtual ledger level view of your vendors. Once you've made those payments to your vendors, if you're able to send statements to your vendors, and it's a very simple thing. I've paid 10 invoices, and these are the deductions of multiple types that I've done on your invoices. If I've captured that at the time of making payments, I can very clearly send it out to them the day the payment is made. Now, for once the vendor receives this information, reconciliation can be sorted, because I have knocked off 10 invoices, so has the vendor knocking it from his infrastructure. Now, these applications can also be made open to the vendor ecosystem, which makes the historical way of reconciliation of calling ledgers from vendors and trying to do a manual check and then sharing it with auditors, and then they also validating this and then burning the midnight oil. From an audit standpoint, there are standalone solutions, and we at CashFlo also have a payment and a recon module where auditors, vendors, corporates can come in, see what payments have done, what deductions have happened. Just take a copy of that ledger in an Excel and knock it off in their scheme of things. So reconciliations are something that organizations have struggled in the past because of them being time consuming. And where do you take the source of truth? With point applications being there, the North Star here is to get the anchor or a buyer and the supplier on the same level in the form of a virtual ledger, which solves for the reconciliation part. And once this reconciliation is done, then the banking reconciliation is even a much simpler thing, because you've got the UTR entries. Can they just go back and knock off these entries into my ERP? That's a much simpler problem to solve. But the larger problem is on the vendor recon side of things, where I think it's been time consuming in the past, but it's becoming streamlined as we speak.
Okay. Well, thanks a lot on that front. Dushyant, any last thoughts on other general good practices? Do you want to round off the session as well a little bit before we get to questions and answers, right?
Yeah, sure. No, I think again, what I said in the start. Regulations are a ever evolving, kind of a landscape, right? Especially in India. I think at the stage at which we are, at the pace at which we are growing, it is, it will sort of, throw up new curveballs, right? That will come in. Technology is also evolving in parallel. There are things that, obviously weren't achievable, even 2 years back, which are now very, very easily doable, right? A lot of that coming in from the government's push as well, and a lot of innovation happening. So I think the idea here is that like as industry, right, or as companies, we always need to be sort of just be on the top of what are the latest developments that's happening in the industry, and just be on the lookout for what more solutions are there, right? What more can be done, what more can be provided, because it can actually change within 3 months or 6 months, right? You may be looking for a solution today which is not there, but 6 months down the line it may be available. Small things, right, come into picture. For example, companies want to check whether the party that I'm dealing with, they are actually a valid company, right, and they've not been struck off in the MCA, right? You can do that check using CIN today, right? We spoke about a bunch of checks already during the session. So I think overall the idea is, I think the way I look at this industry evolving is, the regulations will also keep on increasing, right? But so will the technology solutions around it that will ensure, or that will ease the burden of following, those compliance, like RK mentioned. The burden of compliance, can't be so much that your regular business gets impacted, right? And hence it becomes imperative that you adopt technology to ensure that you are able to comply with all the regulations at the lowest cost possible and in the best possible manner. Right, and that's something that I'm seeing happening a lot in the industry.
Yeah. One last point from my end before we can open this for Q&A. Previously, and we're talking about the early 2000s and the mid 2000s, where people were trying to solve each and everything in the ERP, because making two systems talk was a little difficult at that point in time. We were dependent on FTP, SFTP, and macros was a very favorite thing of the industry. What's changed in the last 5 to 6 years, and during the COVID era itself, is that the trust on APIs to be able to bring different applications onto the same platform, the ability for multiple systems to connect has gone up exponentially. People trust that the APIs any application gives is the way forward. Has made it easier for corporates to move from solving everything in the ERP to solving things outside of ERP and bringing it back into the ERP, which makes life of point solutions, the overall process of conceptualizing and implementing them very, very simple for organizations, which was not happening a decade back, is how I would see this.
Got it. Yeah. And I think when you have compliance and corporate governance in general in place, you just sleep better, right? Small things add up. Super. I think some question and answers. I think Dushyant ji had one question on ISD number clarification. This is something that we're not aware of right now, but I will come back to you, right? Like after the webinar and connect with you separately. The second question is on CashFlo. Heard that CashFlo does some extra checks like ITC claims on 180 plus days overdue bills also. Can you elaborate on that, please?
Yeah, sure. Let me take that. So essentially, again, under the GST laws, if a particular invoice has not been paid for 180 days, then as a buyer, I am supposed to reverse the input tax credit that I have availed on that particular invoice, and then when I actually make the payment, I have to claim that input tax credit again. Right, and this could be for a variety of reasons, right? I could be under a dispute with the vendor, there could be some quality issues, right, so on and so forth. But this is a law that I have to follow. And for industries, especially which typically have longer cycles of checking and realizing that actually whether the good is correct or not, this becomes more and more prevalent, right? And then keeping a track of this manually, that I have a invoice, like think of it, if I'm a company that processes like 10,000 invoices in a month, right? Keeping a track of which invoices have actually crossed the 180th day due date, so I need to now reverse the input tax credit, and then when I finally pay it, also ensuring that I'm claiming that input tax credit again, can become a very difficult and very manual kind of an activity, which means things will get missed out, which means time is being lost in doing all of this. This is again something that we've solved in our APN payment suite, where the buyers can very easily get alerts from the cash flow system to say this is an invoice, this has now exceeded the 180-day threshold, so please go ahead and reverse the input tax credit on this invoice. And then whenever you pay it again, another alert comes in that you would have reversed the input tax credit on this invoice earlier, now you can claim it back again. All right. So that's something that we enable.
Got it. I have one more question from Dushyant ji, which is if my vendor is not issuing e-invoices, even when my purchase with them is more than 5 crores, right?
Yeah.
Is it my liability or is there any obligation on me, right, from a regulatory perspective?
Yeah. So see, basically, if you're buying more than 5 crores from the vendor, then effectively the turnover of the vendor is more than 5 crore, and hence they are under the e-invoicing gamut, right? Again, as per law, you cannot claim input tax credit on an invoice generated by a vendor which is under the e-invoicing category if they don't create an e-invoice, right? So basically, the obligation on you is that you can't claim input tax credit on this invoice if the vendor is not giving you any invoice, right? So you need to ask the vendor to raise an e-invoice to you, right, and get that so that you can claim your input tax credit. Otherwise, it's going to be a loss.
Got it. The next question is from Mr. Praveen. Can you please throw some light on GST integration and the implications of the same? Just a second.
Yeah.
Let me actually unmute Praveen ji. And Praveen ji, maybe you can unmute yourself and you can ask the question yourself, right? Like I think we need a little bit more context.
Hello.
Yes, Praveen ji, we can hear you.
Yeah. So there has been talks about the GST integration part from the fintech. So as of now, it has not been successful because of this input tax clarification, the vendors not been compliant and all. So we have been I'm from the trades platform. So we are working on the GST integration part, but this has been prolonged from so long. So just wanted from your expert advice whether how far it has been reached and obviously you have mentioned about e-invoicing, the impact on MSME support. So GST integration will also be an authentication factor for such fintechs. So what exactly is the status right now, and from your point of view, how it would be benefited for these MSMEs?
Sure. Let me take a crack at it. I'm not sure if I still fully followed it. But basically, see, what we are seeing evolve is that the GSTN is providing now a bunch of APIs, that can be used by companies to do GSTR1 filing, GSTR3 filing, getting the GSTR2 reports, checking the status of the vendor, whether the vendor is, filing GST on time or not, whether they're filing it with a delay, right? So on and so forth. So actually, there are a bunch of APIs that are now being provided by the, by the government, right? To do everything around GST in an automated fashion and an integrated fashion, right? So what you can achieve is that you have your data in your ERP, you have the APIs available, from the government, and you can actually, like, there are, point solutions available which help you integrate between the ERP and the GST portal, right, through these APIs to ensure that data can flow seamlessly from ERP to the GST portal. So GST integration actually per se has evolved quite a bit, and these APIs have become more and more stable, right, as the usage has increased, right, and as more requirements have come in. So today, if you actually talk about everything can be done, through APIs. You can create e-invoices, you can create e-way bills, you can do GSTR filing, you can do GSTR recon, you can do everything right around it without having to do any manual extraction either from your ERP or from the government portal, right? You don't need to do manual extraction on either side. The data can flow automatically from the ERP, it can flow automatically from the GST. Obviously, the logic needs to be there to do the recon, but you actually don't need to do anything manual. So integrations have evolved quite a bit, right? And they will continue to support newer use cases as they come along.
Superb. I think we've covered all the questions. If any of you have any questions afterwards as well, please feel free to email us, and we'll be happy to get you clarifications for any of your questions. I just wanted to very quickly just share with the audience what we do here at CashFlo, because we have a GST filing, recon, GST check and hold product. And we also help with MSME compliance, with TDS compliance, with virtually all compliance needs from a large corporate perspective for payments between you and your vendors. But we also have an entire AP automation and payment suite. So I just wanted to spend a minute and just share a small demo video with the entire audience here. Just a second. Let me just leave this. Okay, I'm not able to share it for some reason. Let me know if you can see my screen.
Yeah, the screen is visible, Akshay, but the video is not on at the moment.
Introducing Cash.
Is the audio clear?
It is.
Yeah, it is.
Flow, the award-winning AP automation and supply chain financing platform trusted by 3,000 plus Indian businesses. Streamline your accounts payable processes and turbocharge your business growth with CashFlo's user-friendly automated solutions. Let's explore 3 products to unleash automation and revolutionize your finance team's operations. CashFlo's AP automation helps you eliminate manual data entry and automate your entire payables process, from invoice capture to recon. Capture invoices and book liabilities with near 100% accuracy with AI-powered OCR scanning. You've seen OCR, but you've never seen OCR this good. But CashFlo's automation goes way beyond OCR. CashFlo automatically checks and verifies each and every aspect of the invoice, including GST number, IRN number, item level rate and quantity, and highlights only the cases where there is a discrepancy. Imagine not having to check 95% of your invoices. It feels like magic and saves you hours of work each week. Proactively check vendor GST registration, compliance history, and invoice filing status before making payments. Withhold GST payments to non-compliant vendors with ease. It's a revolution at your fingertips. With CashFlo AP automation, you can also boost your profits by 7% through saving on ITC losses from non-compliant vendors. Next up, let's talk about CashFlo payments and reconciliation, which makes business payments ridiculously easy and completely eliminates the risk of errors or fraud in the payment workflow. With CashFlo, you can seamlessly integrate payments with an unlimited number of your company's bank accounts in under 6 weeks. Lay back and relax as you make vendor payments through your preferred bank account and experience real-time reconciliation with your ERP. No more complicated and expensive host-to-host banking integrations. CashFlo brings the convenience of consumer payments to the business world, allowing you to close your books 3 times faster each quarter. You can also configure multi-level approval flows with custom logic to cater to invoices from different teams and varying amounts. Establish an ironclad corporate governance structure with comprehensive audit trails for every payment and easy access to every invoice copy, ensuring unwavering compliance with internal policies. Once you are done with payments, you can even keep your vendors informed immediately. An automated email shares detailed payment info, maintaining transparency and enhancing trust. Speaking of vendors, let's have a look at CashFlo's vendor portal and dynamic vendor financing options, which help you onboard new vendors and communicate effectively with them. Onboard vendors in a matter of seconds with built-in KYC checks, bank account and GSTIN verification. Each vendor can also use the vendor portal to check payment statuses, download payment receipts, and raise queries with ease. There's more to keep your vendors happy. With dynamic vendor financing, unlock attractive cash discounts through a dynamic early payments facility for vendors, infusing your supply chain with vital liquidity as and when it's needed, while boosting your bottom line by up to 3%. A true win-win for you and your vendors. Embrace CashFlo today to forever transform your finance function and elevate your team's productivity to unprecedented heights. Bid farewell to the daily drudgery of boring, repetitive, and error-prone tasks and empower your team to deliver excellence at a higher level. Contact us now to witness a free demonstration of how CashFlo can radically revolutionize your finance function. Visit cashflow.io to get started. Introducing Cash.
Okay, I think that's about it for today's session. If anyone has any more questions, please feel free to reach out to us via email. And I'd also like to take this opportunity to just thank both Richakant and Dushyant for sharing your insights with the larger audience. It was great to have you both over, and I think as regulations change and evolve, I think we'd love to have you again, right, and share this with the larger audience. Thanks a lot, everyone. I think we'll tune out now.
Thanks, Akshay. Thank you, everyone.
Thanks, Akshay.
Thank you.
Thanks,
Bye-bye.
Bye-bye.